Good morning, guys. Let's make sure all the pen tools are working before we get going. Let me know if the music's a little bit distracting or not. I can turn it down a little bit. I just thought I'd have a little bit of background music. Morning, Roberto. Morning, Royston. Hope you're both well. Morning, Bongo. How are we all doing today? So we're going to go through gold again. So this is the Gold Market Mastery webinar. We did one of these earlier in the month, and yeah, it went down really well. I hope everybody learned a lot in those webinars as well. So we're going to be running the same sort of thing today. We're going to be running one at 9 a.m., 12 p.m. and 7 p.m. British Standard Time. So once this one is done with, I will schedule the others. But we're going to be going through gold again. We're going to be going through some key sort of news events that have happened recently. We're going to go over some key levels, maybe some seasonal stuff as well. And yeah, we'll jump into that. We'll kind of discuss what we discussed last time as well. Obviously, there's been some news developments since then. I did a video on Monday. If you haven't managed to catch it yet, I highly recommend having a little look at that one. And basically explaining what's going on with the US and the debt ceiling situation at the moment, and how that could be a potential factor in what could happen next with the price of gold. Obviously, it was a little bit of a doomsday video. So yeah, but if you want to go watch that one after the webinar, I highly recommend it. You said my name correctly. Well done. No worries, Bongo. Hello from LinkedIn as well. Unfortunately, sorry, if you are on LinkedIn, I can't see your name, so I apologize there. But if you are watching on LinkedIn, then hello. As always, guys, if you want to subscribe to any of the socials, they're all listed on the left hand side there. You can see that we're on Facebook, Twitter, YouTube, Telegram, and LinkedIn. If you are watching this on YouTube, thank you for joining me. And yeah, if you haven't subscribed, please hit the subscribe button, because it really helps the channel in more ways than you know. So thank you for doing that. If you're already subscribed, thank you. This is live. Yeah, absolutely. Thanks, Royston. So I think we've got everybody in that could potentially join now. It'll be recorded as well, so if you do want to watch this later, it will be uploaded onto YouTube after it's done, so you can re-watch it back. If you have any questions as well, please feel free to drop a comment in the chat box. Good morning, Abdul. Yeah, so let's get going then. Let's chat a little bit about gold. Like I said, if you have any comments, questions, if you have any thoughts about what you think could happen to the price of gold, drop them in the chat box. We'll have a little chat about them. But essentially what we went through last time was this overall sort of technical range that we're in at the moment. And we were discussing how the price of gold has moved over the past year or so. And we're now back at some key areas of interest. And one of the things we spoke about was being at the 2075 level all the way up in here, which are these range highs that have formed. And when we were talking about in the last webinar, we actually had a rejection of that level. And we were talking about where the price would trade through that level or whether we will get a sort of rejection of that level. And I said one of the things that I want to see is a sort of common trading pattern, which is the double top pattern, where you have an area of resistance like that 2075 handle. Price will retest it, come back down, form another retest, and continue lower. At the time, we were around about this area in here, I believe, and price did give us that double top pattern. You can see price comes and returns back to that previous area of resistance. As you can see the kind of wick on that body there, and we came and retested that, and price has since traded to the downside. So if you were involved in that move there, then that was a nice move. I also discussed the potential around about this neckline of the double top pattern, and again we only kind of overshot it slightly before price continued lower. So if you did manage to catch any kind of move there, then that was a good one to jump on. Now gold has been pretty range bound, you know, let's be honest. It's in this kind of range through here. We could probably draw a little bit of a channel out through there as well. So if we're kind of putting a channel in, it looks something a little bit like this. Okay, and these patterns can often lead to some downside pressure, because what we often see is that we get a large impulse into a level of resistance, and if price starts to sort of consolidate, it can mean one or two things. What it means to me is that there is an accumulation of some sorts. Okay, obviously we don't know which way price is going to break, because if we, you know, could see the future, then, you know, we wouldn't all be sitting here right now, you know, would we all be multimillionaires? But what we need to wait for is, how does price react? Does price trade to the downside and break lower? Does price trade out and make its way to the upside? Well, at the moment, we're starting to see signs on this daily chart that price could start to break a little bit lower and maybe head for our next level of support, which in the previous webinars we marked out as this sort of 1950 zone. If I was just to sort of draw a little bit of a zone around that, that's the type of area I would be looking for. Do you have a group for a new beginner? I would say the YouTube channel is very beginner friendly. If you were interested in looking into the Forex markets, then yeah, I'd say head over to our YouTube page. We do have a lot of beginner stuff on there as well, but I try and keep the videos very beginner friendly, in terms of we kind of have a blend of some news as well as some technical analysis in there as well. So if you also look for the videos on YouTube, look for the archive. There's a lot of sort of strategy videos in there you can take a look at. But yeah, try and keep it as beginner friendly as possible. If you have any questions, feel free to drop them in the chat today. But yeah, so you can see that we kind of have this build up here where we've come up into that 2075 level. We're starting to sort of break down that move now. And this has all come really from the strength in that US dollar index at the moment, or the US dollar in general. I was listening to Bloomberg this morning, and there's been JP Morgan are pricing in 2 rate cuts by the end of the year. The other banks that are following along that line as well, some even predicting 3 rate cuts this year. And the data out of the US is kind of agreeing with that, although we did see a jump in retail sales yesterday. Retail sales doesn't necessarily sort of a direct indication of where the Federal Reserve will kind of go with their sort of estimates. But it does suggest that maybe there's a little bit more consumer spending going on, which obviously would affect the likes of inflation and things like that. So we saw a little bit of an uptick in that. The dollar gained strength because of that, as well as obviously other factors that are going on at the moment. Now, we talked about the debt ceiling on Monday. And there's a little bit of a sort of positioning going on between the Treasury as well as sort of the administration, Joe Biden administration. And that is causing a little bit of sort of doubt in investors' minds of whether they will raise the debt ceiling. Now, like I said in that video, though, it is more than likely that they're going to come to a deal. Okay, it is more than likely. They have never failed to not come to some kind of agreement where the debt ceiling is raised. Okay, so we have to say that. However, could that uncertainty affect the price of gold? It could. If there was, imagine if the debt ceiling wasn't raised and they failed or they defaulted on the debt, then I think the price of gold would actually be be the one to watch in terms of price will probably move a lot higher. At the moment, though, I'm seeing that it's going to get raised. They're not going to really take that risk, and we're probably going to see the dollar strengthen, and I think gold could end up back down at this 1950 level. Let's go take a look at the dollar index, because we like to look at the sort of correlation between the US dollar index and the price of gold. Now, in Monday's video, I did kind of discuss that although we saw this kind of run up from the 101s breaking into the 102s last week, we didn't really see that impact gold at the end of last week. Instead, gold still kind of I reckon around the uncertainty just kind of ranged a little bit. Whereas with the dollar index here, we can see that we've traded through that key 102 high now. We've then used that range as support. So if I zoom in a little bit, just so you can see that a little bit better on the stream, you can see that we've come back into that 102 supporting level now. And we've started to see that US dollar start to strengthen, and potentially we're going to head into this 103 resistance level now. So if price trades through the 103, let's say for instance we get to the 103, we've had pulled back slightly before trading through that and head towards the next level of resistance, then we've got the opportunity to be a sort of short-term seller of gold, okay, because that dollar would impact the price of gold. If the dollar index is moving higher, the price of gold is more than likely going to move lower, and we should be looking to take advantage of that potential move. Do we have any questions so far, guys? Everything okay? Remember, we still have a competition on as well. So if you are here in the Gold Market Mastery webinar and you want to have a chance to win an ounce of gold, then if you check out the banner at the bottom of the stream, you can see how to do that. Okay. All good from Roberto. I'm going to bring in a little bit of seasonal data shortly, and there's a couple of ways you can do that. Let me actually get another website up. Show you a free website that you can look at some seasonal data. Okay, right, let's have a little look if I can get this up. Here we go, gold futures. Okay, so this is a free seasonal website. So if you're looking for some seasonality data to add into your confluences of trading, then you can use a website called Equity Clock. Okay, this is all free. The only thing that I would say about Equity Clock is that sometimes they don't update the charts for a while. So what you need to do when you come onto Equity Clock, and the way you do it is you come onto equityclock.com. Let's just go to the main page. You'll see it looks like this. You can go to the home page, which is what we're on now, sorry. But you can see down the left and right side, you've got all these sort of seasonal patterns that you can look at. So like the seasonal start, you can go to May, see what... Hi, 𝖢𝖥𝖣yiy. When do you normally do this webinar? This is just a sort of one-off for this month, and we're doing it today at 9 a.m, 12 p.m, and 7 p.m. British Standard Time. I'm also doing a potential webinar tomorrow, but we basically look at sort of news events when we do a live stream. So we're going to be looking at the unemployment claims in the US tomorrow around about 1:30 p.m. So you can join me then as well if you'd like. But yeah, so basically we're going to come down to futures. You can see it says commodity. If we click on to commodity, you can see that we have platinum futures, corn futures, cotton. So you've got a vast majority of things that you can look at into here as well. You've got stock sectors, so you can look at energies, things like that. But what we're going to be looking at is gold futures. So if we just go to the second page, gold futures, we're going to click onto that, and this is where you get to. Now, what I would say, like I said, is make sure that the chart's up to date. Now, if you go to the bottom left-hand corner, it's quite hard to see, but it says time frame there, 20-year range, ending in the end of 2022, basically. Okay, so make sure that you check that little area out down through at the bottom of the chart, just to make sure that it's up to date. So that's the only thing I would say about Equity Clock. But the good thing is about this is that it is a free platform to use. And what I'm actually going to do is I'm just going to copy that up. I'm going to put it in the comment section there so you can see that. So let me just type in free gold seasonal charts here. Okay, so you can have a look at those. That should come up in on Facebook and YouTube chat. It won't be on LinkedIn, unfortunately, or Twitter. But yeah, if you jump over to Facebook and YouTube, they'll be in that chat there. Royston, gold price movement is quite erratic. What time frame would you use for entering a trade, and how would you manage it? That's a really good question. The way I would look at managing a trade on gold at the moment is I'd probably be looking more on a higher time frame perspective. So like when we talked about it last time, I think when you say that price movement is quite erratic, I would say that would make me want to use a higher time frame. And if so, I'd probably be on this sort of 4-hour time frame. So for instance, when we had that rejection in there, you know, you've got these kind of inside candles that were building up. That could be something that you could look to sort of have sell stop orders on. Now, I'd say sell stop orders because you want the momentum of the market to go with your sort of bias. Stop losses, I would always put them above key swing points. So you've got this high in here, for instance, or that high there. Or you can use an ATR, okay, so an average true range. I like using ATRs quite often because it will give you an average of X amount of candles or X amount of days if you work out the sort of candle to day ratio. So ATR is always a good one because it's always sort of, it's dynamic essentially, and it's always within what the conditions of the market are at that current time. So you could look at something like that. The way I would manage a position, so let's just move this out of the way a second. Let's say we entered short here. Okay, just going to stretch that across. If I get a pink line, our stop losses are here, let's say. Okay, the way I would look at managing a position now, I'm always a big believer of when price comes into our first sort of target area, I want to be taking some of my profits off. Okay, so for instance, a target area for me would be a significant high or low. Okay, so I would have first targets around this low here. Okay, second targets would be in and around this point. Okay, reason being is because obviously price has been reacting in and around this area here, and we also had a reaction around that point in the past. Okay, so I would expect some either buying to come in and around that level in the short term, okay, or buying to come in down there in the short term. All right, so those would be my first two targets. Now, the way I would look to manage this trade is two options. So if price comes down into this area here, I would take 50% off the trade. Okay, the reason I do that is because I want to secure some profits. The second thing I would do is move my stop loss down to break even. Okay, so my stop loss now would be down in at this point, right? Even just a little bit in profit. Okay, just to avoid your spreads and things like that. So when price comes back, obviously I'd be knocked out on the second position for break even. Okay, but that doesn't mean that the trade's done with. Okay, so often when people get stopped out on their second positions for break even, they just go, oh, you know, I'm not going to get in again. But it doesn't mean that you can't get in again around that point. Okay, so you could even have a thing where if you hit your first targets, you could set an exact same position up, right, on a limit order. Because if price does come and retest and then does that, you're not missing out of the sort of move there. Alternatively, just look for a different type of position. So what we talked about once it came into that area was, what if price comes and retests the neckline and then continues down? Well, I can see here that we've got a little bit of like what I would say is a head and shoulders pattern, right? Now, I talk about this quite often. If you watch a lot of my videos on YouTube, what I talk about quite often is when something's in a retracement phase, it will be in an upward trend on a lower time frame. So if I go into like the 15-minute and zoom out, okay, what you'll see is that price is making higher highs and higher lows, right? Now, what I would be looking for in particular is for that condition to change. Okay, so if price came all the way back up into our level of interest, that neckline area, let's say, what I'd be doing there is looking for a couple of different types of patterns. I'll be looking for your double top, okay? I'll be looking for your head and shoulders. I'll be looking for just a rejection and a lower high, okay? Because those conditions are suggesting to me that the trend is reversing at that point. So in this sort of scenario here, let me just remove that and I can zoom in a little bit on it. In this scenario here, do we get any of those type of opportunities? Well, I would say yes, because you've got this move down through there. You've got the lower high, okay? You only know that's a lower high because we create this lower low. So the way I would look at this is I would set a resistance level there, okay, near the highs. The reason why I do that is because sellers have pushed price in and around. That's a really bad right in there, but that says sellers. Sellers in and around that area, okay? So I'd look at the body to the wick, okay, and I'd say that is my point of interest, okay? And again, what do? We look for the exact same things. Now, price comes up, you get your alert. Let's say you set your alerts here. You get your alert and you get a double top pattern. Perfect. So double tops are my favorite thing to trade. So as soon as I see the rejection there, I'll be looking to get in on a potential short opportunity. But this time we're trading a 15-minute time frame, right? So we've gone from trading the 4-hour to a 15-minute. So let's say I want to trade the momentum. So my entry is here. Stop loss is here. This time you can either ATR it above that high or even safer. Whoops. Let's do that again. Above this swing high. Okay. And again, I'm going to look for first targets down at those lows. But we know that the lows, okay, somewhere down in and around this area. Okay. So my target now becomes this low. Okay. First targets, second targets are the same lows down through here. Okay, does that make sense? So you can enter your sort of main position on your higher time frame to avoid the volatility. If price comes down into your target area, okay, take some off, okay? Don't give those profits back, take some off. If price comes and knocks you out for break even, don't use that as a, oh, I'm disappointed, you know, because why are you disappointed? You've took money out of the market. That's what you want to do. You've took money out of the market. So don't get disappointed that you're at break even. Look for a potential. If the bias is the same, look for a potential opportunity. If factors have changed, then obviously you need to reconsider what's going on. But we know that the dollar's getting stronger. We know that we want to be looking for those gold shorts. So if price comes back up, technically this higher time frame as well is giving us the lower high, lower low, lower high, lower low, lower high pattern. Okay, which is something that you see a lot in downward trended markets. Okay, does that make sense? So if we go back up to our seasonals, let me just grab that seasonal chart back now. You're welcome, Royston. So you can see here we've got month of May. In the past 20 years or so, the month of May has been a little bit of a range bound one. Okay, we usually find a sort of low around about June. Okay, June to early July, and then we usually get that sort of rally up. Now, I also have some detailed data up here. I'm just going to grab a quick screenshot of that, and then let me just type in gold seasonals. And I'll just grab that open. So hopefully you can see this as well. This is by Markets Made Clear. So this is a little bit more detailed analysis in here. Now, what I've been able to do with Markets Made Clear is identify when May has been bearish. Okay, so we can see here, this is actually May in here. I haven't screenshotted that correctly, but this is May. Okay, now the orange line is 20 years of data. Okay, so very similar to equity clock. The custom is I've typed in basically what would happen if May was negative. What is the sort of conditions around that? Now, we're obviously seeing that at the moment, right? We've had last week was bearish. This week is looking to be a bearish one as well. So we could have 2 weeks of consecutive bearish closes for gold. And if that was to continue, what could happen? And again, through July, June and July, we usually still find a bottom in the market before seeing price move to the upside. So I think what we're going to be looking at here really on the price of gold is this 1950 handle being a key level to watch. I think price is going to try and make its way down into this level of support here. And I think if the conditions start to change then surrounding the likes of the dollar and things like that, then we're probably going to see some buying coming in around that area, especially if we're sort of the middle to end of June, start of July, when price gets to that point. Okay, and that would kind of fit in nicely with the dollar index moving higher as well, potentially around this sort of trend line resistance, or even a little bit higher at the 105.75 handle, which were the highs back in March. So that's definitely something I'm going to keep my eyes on with regards to gold at the moment. Prince Caleb, as a swing trader, I rarely set my trade to break even. That's cool. That's your trading plan. And if it works for you, it works for you. Everyone's different. So I personally like to take profits out of the market when we get into key highs and structure. And then I'll look to see if there's a potential position going forward as well. So that's the way I'll look at it. Right, guys, we're coming up to the end of the webinar. Any questions before we call it there? Again, I'm going to be doing another one at 12 p.m. and 7 p.m. British Standard Time. So if you can join me for them, please join me for those. We will largely cover the same sort of stuff that we've talked about in this webinar as well. Thank you, Caleb. Right. I'll leave it there then, guys. You can post questions and comments after this, and it will be recorded and be put up onto our YouTube channel as well. Like I said, I'll be doing another one at midday today and one at 7 p.m. And if you want to join me for those, you can join me for those. If you have any questions maybe that you have thought about after the webinar and you want to ask me live, then join me for those as well. Thank you for joining me today. Thank you for taking your time out to join. If you are watching on YouTube, please hit that like and subscribe. If you're watching on any socials, please hit that like button. It really does help us out. So we really want to, it helps us know that you like the information that we're talking about. So yeah, if you could do that, that would be really, really appreciative. And yeah, thank you for joining me, guys. And I will catch you at 12 p.m. today. Have a great day.